What's good, YouTube? It's your boy Zay, and welcome back to another Setup Sunday. And we're going to cut straight to the chase in this video because this has been a very hard episode for me to record, and I have no idea why. So this week, it's all about earnings and the volatility we could potentially see. I'm gonna give it to you straight. This is a make or break week for the market. We got the top companies in the S&P 500 reporting, and expectations are high. So a lot is riding on this week. And so for this episode, we're gonna solely focus on our article for the week, and we're gonna go into the charts. I'm gonna save the lesson for the week next week when things kind of calm down. But we really need to focus on this week because a lot is riding on this week. And I ain't trying to scare nobody, but yeah, it's that big. So with that being said, we're gonna jump right into the article of the week as well as to these charts. So don't forget to press that like button as well as subscribe to my channel so when I drop a video next week, you are in the know. And without further ado, let's get right into it. All right, y'all. We're gonna get into the article of the week. So as you can see, the headline, taxes and inflation will be the key themes for the markets this week. At the end of the day, we got a lot of market moving news coming out this week. So as you can see, a third of the S&P 500 is reporting earnings. We have a Federal Reserve meeting on Wednesday, as well as we're going to be hearing about new spending and tax proposals from the White House. The algos are going to simply go crazy this week. Who knows how they're going to take in all this information and respond. So we got, Apple, Microsoft, Amazon, Facebook, Google, all releasing earnings this week. And we have Tesla on Monday. As you can see, they're saying that the Fed is not expected to take any action, but they're going to talk about inflation. And we all know inflation is a buzzword in this market and can spook investors. So with all of that, there's the possibility for a ton of volatility, y'all. Now, you already know if you want to dig deeper into this article, there is a link down in the description of this video so you can go ahead and read a little bit deeper. But those are the highlights for the week. We really, every day, there's potentially some market moving news on the horizon. And we kind of had a little bit of peak of that last week as far as how the market will react to certain things that they hear when the news dropped that Biden was potentially looking at raising the capital gains tax. You can see the market immediately sold off. And we'll get into that when we look at the charts in a second. But I want you guys just to be prepared for all of this news that is coming out. So when you think about positions you're in and how can this news potentially affect them, you really need to do some deep digging or do some deep research to figure out, okay, if certain things play out, depending on this news, how can my position be affected? And again, put in those protectionary measures that we talked about, stop losses, profit targets, et cetera, et cetera. So that is the article for the week. Now, I do have one other thing that I want to share, and it's the Earnings Whisper calendar. So as we take a look, you can see at all the companies that are reporting this week. So like I said, we got Tesla after the close on Monday. Then Tuesday, we got AMD, Microsoft, Google, Visa. I mean, these are some really big companies that are going to be reporting. On Wednesday, we got Apple, we got Facebook, we got Qualcomm, Teladoc. All of these are after hours. Shopify before. We got on Thursday, Amazon, you got Twitter, you got Neo, McDonald's. And then, of course, we ended on Friday with some energy companies and consumer good companies. So again, a really big week. A lot of market movers are going to be reporting this week. So man, it's going to be an exciting week, whether it's to the upside or to the downside. It is going to make for a big week. Now, with that being said, y'all, let's go ahead and jump over to these charts and get into some levels that we need to pay attention to this upcoming week. All right, y'all, let's get into these charts of the week. We're going to kick it off with the Nasdaq. So looking at the Nasdaq from a weekly perspective, as you can see, last week we had a low of 13,698. And we hit a high of 14,062. So ultimately, those are our support and resistance levels from a weekly perspective. Now, let's dig into the Nasdaq from a daily perspective, just so we can get a feel of where do we expect to go next week, or what are the levels we need to pay attention to for next week. So when we get into where we are currently, right, here are the main levels that I will be paying attention to. So for the upside, if we can get a close above 14,050, give or take, I can see the Nasdaq potentially running up to about 14,175. That is where our previous all-time high was. We will need to get a close above 14,175, and that potentially opens us up to go to about 14,400, which is my end of the week target, 14,400. So I will definitely be looking for upside. When we talk about the earnings and all that's coming, you know, I have a lot of faith in, you know, these top companies, Amazon, that they will do well going into earnings, and that's going to put pressure on the market to go up. However, if there is some slight chance that the market decides to sell off on this good news, the levels that I will be paying attention to the downside is definitely that 13,700, which, as we said, is previous support. If this level breaks, then ultimately I could see us coming to look to fill this gap here and going possibly as low as around 13,485. So basically 13,500 to the downside. So from this week, coming into this week, the levels that I'll be paying attention to, as I said, just to recap, to the upside is we need to get a close above 14,175. So I'll be seeing to see if the market can go up to about 14.1. If we can close above that, then again, I think we have more leg room to go to the upside, with us reaching about 14,400. To the downside, if we decide to get rejected at this 14,000 level, I could possibly see us going back down to the 13.7. And if that doesn't hold, then the next level to pay attention to will be 13,483, basically 13,500. So that's what I will be paying attention to this week when it comes to the Nasdaq. So let's get into the QQQs next. All right, now getting into the Qs. So when we look at this past week, you can see again, it was pretty much flat. We opened the week at 340.39 and we closed at 339.42. And so that is right there is going to give us our weekly support and resistance levels. So as you can see, I have the 341 and then I got down to the 334. That is pretty much, you know, the trading range we stayed within. But let's go down to a daily chart again to really zoom in and see, okay, what should we be looking for or what to expect next week? So, or this upcoming week. So when I look at where we are, again, we are kind of right in the middle of a critical area to where either the market wants to make a move to the downside or to the upside. Thinking about earnings and stuff, I think we're going to the upside. So what will I be looking for when it comes to the Qs? So for the Qs, we need to get a break above this 341.64 area. Once we can get a break above 341.64, so basically 342, and hold that, I think we then go to about 345. From 345, we will look to run up to about 350. So those are my two end of the week targets for the Qs, 345 and 350. To the downside, if we get rejected at this 341 again, of course, it looks like we'll go back down to about 334 even, right? And if that doesn't hold, then the next level that I'll personally be looking for to hold as a secondary support will be 330. And if 330 breaks or gives way, then we could possibly see 324, 325 to the downside on the Qs. So again, just want to make sure you know your downside levels as well as your upside targets. So for the Qs, upside, get above 341, 342. That opens up 345 to 350. If we get rejected, 334 needs to hold. And if 334 breaks, then that means we'll be looking at about 330 down to about 325 for the Qs. So that's what I'll be paying attention to for the Qs this week. And now we're going to get on to the SPX. All right, so looking at the SPX, y'all. So you can see the SPX had a flat week. We opened at 41.79 and we closed at 41.80. So when you look at our support and resistance is at that 41.80. So as you can see, I have 41.87, 41.85. And then for support, it's right at that 41.20 area. You can see our downside was 41.18. So that is our weekly support and resistance. Now, again, let's kind of dive deep into this and look at it from a daily perspective to really get some understanding of what do we need to pay attention to for next week. So again, upside target for the SPX. If we can get a close above this 41.85 level, I really believe this opens us up for a potential run to about 42.50. That's where I'll be looking for the SPX to get to by the end of this week is 42.50 if we break to the upside, right? Now, to the downside, if we get rejected again at this 41.85 or so, look for us to come down and test support at 41.20. If 41.20 does not hold, the next level that I will be looking for us to come test will be 4,075. And God Almighty, we need to hold that level. And if not, then I think it would be more downside to about 39.75 to come clean this area up right here, because there's really just no structure when you look at the chart up in this area. So it'd be before we see any support, I think we'd have to come hit the 50-day exponential moving average. So when we look at the SPX, what the company's reporting, I think this does lend itself to go to, more to the upside. So that's the way I'm favoring, I'm favoring it to the bullish side. So once we can get a break above 41.85, again, first target would be 42.50. Hey, if it breaks 42.50, don't be surprised to see 4,300 either. The way we blasted through 4,000 and went straight to 4,100, we could see the same thing when it comes to that 4,200 level, to where it doesn't even, give 4,200 a chance. We just fly right through it and go straight to 4,300. So again, those will be the levels that I'll be paying attention to on the SPX. And so let's get into the SPY now. So looking at the SPY, so this past week we opened at 416.26 and we closed at 416.74. So a relatively flat week for the SPY. Let's drill down to our daily view, so that way we can really get a good understanding of what actually happened and what we need to pay attention to going into this upcoming week. So from a daily perspective, as you can see, we need to get above 418 and hold above 418. If we can get above 418, then essentially that opens us up to go to about 424, 425. So that's the levels I'll be paying attention to the upside for the SPY. When I look to the downside, again, if we get rejected at 418, then 410 is my first area of support. So about 410.50. And if that holds, if that doesn't hold, or if that gives way, the next area of support that I would ultimately like to see will be 403, which is when we pretty much opened up the month of April. And again, if that level does not hold or gives way, then potentially you could see the SPY come and clean this area up and drop down to about 397.36. That is what I'll be paying attention to on the SPY. So upside target would be get to 418, close above 418. That opens us up to about 424, 425. Downside, got to hold 410. If 410 breaks, then it looks like 403 will be our next area of support. And then if that breaks, then 397 will be the final area of support. And then if that gave way, then it's pretty much we back into like a bear market. So that is the levels. Those are the levels I'll be paying attention to for the SPY. So now let's get into the Dow Jones, or AKA the DIA ETF. Okay, so looking at the Dow Jones, as you can see for the Dow Jones, we opened at 341 and we closed at 340.43. This is the chart that I was the most bearish on, the Dow Jones index. But we have a hammer pin here. So it looks like this run wants to continue with the DIA ETF, right? So let's get into our daily view so we can, again, see the levels we need to pay attention to for this week. So when it comes to the Dow Jones, right? For the Dow Jones or for the DIA ETF, what I would be looking for is if we can close above 341, or actually 342. We need to get above 342. We can get above 342 and hold that. I think this will open itself up to about 345, maybe 347 to the high side. That is what I'll be paying attention to when it comes to this DIA ETF. Now, if we get rejected right here at this 341, 342 area, again, we need to make sure that 336 holds as support. If this level does not hold and gives way, then 331 to come clean this gap area up is why I think, this would be the first downside level support we need to pay attention to, would be 331.67 or so. And if that does not ultimately hold, then it looks like we'll be coming back down to about 326, which is right at our 50-day exponential moving average. So for the Dow Jones, those are the critical levels to pay attention to coming into this week. So just make sure, again, you protect yourself to that downside, because we do have a few gaps. But again, with the companies that we have reporting, I think we're going to the upside for the most part. So let's get into our US 10-year Treasury now. So looking at our US 10-year Treasury, and let me switch this to a weekly perspective first. Y'all know that's how I like to look at the chart. So from a weekly perspective, again, I'm still holding strong to that. I believe we need to come down to about this 1.49, 1.5 area or so before it finds any type of support. So I think we'll have another down week on the US 10-year Treasury. I think, we could see another rejection here at that 1.62 or 1.58 area to force it come down, and before it ultimately finds support at that 1.49, 1.47. So I'm looking for another down week when it comes to the US 10-year Treasury. Not much has changed, but this is something that we will continue to pay attention to and watch for. So it still looks like it's on that downward trajectory, ready to come before it finds any support, and that is the US 10-year Treasury. Now, we're going to get into probably what I believe is the most important chart of the week, and that is the VIX, actually, guys. So when we take a look at the VIX, let's just take a look at where we are currently. Right now, we are trading in the gap area that we had back from 2020. So you can see we have been trading within this gap since around March 15th, and this past last week, we actually had a spike on the VIX, and I'll show you when we get to the daily, but you can see the VIX went as high as 19.9, and we opened at 17. So as you know, the all-important level that we have been paying attention to has been this 200-day exponential moving average, which is right around the 18.8 level. So let's kind of drill down on the VIX to see what we need to pay attention to. So when I look at the VIX from a weekly perspective, what I would be paying attention to most is definitely this 20-day moving average that's right at about 21.8, right? And then we have another one at 24.9, aka 25. Now, I know that seems like awfully a lot, but as you can see, oftentimes the VIX gets huge spikes, right? And there has been chatter that the VIX is actually due for another huge spike. So we need to pay attention to the volatility this week. I can't stress it enough. There is a lot riding this week. We have a lot of earnings. We got a lot of news that is coming out. And of course, that is going to create volatility in the market. So honestly, I'm paying attention to the VIX to the upside. I think we could see the VIX probably crack. If it gets back through that 18 or 19 level, we could possibly see it touch our 21.8. And if it got through that, we could see it possibly run up to 24.9. If we had to watch any levels to the downside, I would just go back to our low of about 15.4. If we see a break below there, then maybe we can get back under this 16.9 and trade between 16.9 and 15.4. But ultimately with the VIX, I'm paying attention to the upside because I think there'll be a lot of volatility coming into the market this week. And again, I'm uneasy with us flirting in this gap zone. So the last time we was here, as you can see, it was a major run. So we just need to, again, keep our eye on the VIX this week. I can't tell you exactly what to do, but I can give you the tools of what to pay attention to. So that is the VIX for this week. And then what we're going to do now is get into our Bitcoin chart and get into Bitcoin and Ethereum. All right, guys. So getting into Bitcoin. Looking at where Bitcoin is, it is under 50K. I think last week I was talking about maybe we could see it run up to 70, and it just didn't have enough sauce in it. So it got to 65, and then ultimately people started selling off and said, whoops, we got you, right? So looking at Bitcoin now from a weekly perspective, what do we think is going to happen this next upcoming week? Right now, if Bitcoin closes below 50K, that opens us up to go to about 45 down to as low as 38,800. When I also look at the technical setup that we see here, this is shaping up to be a 3 black crows. So I definitely expect another red week for Bitcoin. And again, I think it goes as low as 45K to about 38,882 before we find any type of support. And then from there, I do expect for Bitcoin to kind of consolidate a little bit more before it makes another leg to the downside. Remember, ultimately, my long stance or my point of view on Bitcoin is that I think we ultimately see as low to 25 to 20K Bitcoin before it rebounds to go back to say 100K or those higher levels where we actually think Bitcoin will ultimately end up. And that would actually be a healthy correction for Bitcoin. If you study Bitcoin's drawdowns and corrections in the past, a 50 to 60, 70% correction is not out of the it's not out of the question for Bitcoin, especially when it ran as high as 65K. Because when you think about half of 65,000, that only brings you back down to about 30,000 or so anyway. So, if you bought in under 10K, you're still doing well. So that's why a 50% drawdown on Bitcoin is not out of the window. So don't be shocked if you see, Bitcoin get down to 30K, 25K, because it can happen. But in the interim, the levels to pay attention to are 45 and 38,800 is where you ultimately will be looking for support on Bitcoin to keep it from further breaking down. So let's get into Ethereum's chart, because this is the chart that I think is very eye-popping. So even though Bitcoin has been going into correction, Ethereum has been holding strong, and Ethereum is actually back at 2321, which was our level that we had talked about a few weeks back, which we saw Ethereum going to about 2300. So let me go ahead and plot some support and resistance on here real quick. I did do some cleaning of my charts. So when you look right now, it seems as Ethereum is trading between the zones of about 2,000 to 2,550. So again, ultimately, your support is going to be around this 2,000 area, and then your resistance is going to be around 2,500. So we definitely want to keep an eye on Ethereum and see what's going to ultimately happen. I think right now what's happening is that, we're going to have a correction in Bitcoin, and some of that money from Bitcoin may flow into altcoins. It is what you call altcoin summer, or it is altcoin season. And so we could see some of these other coins go on potential runs. And so with Ethereum, ultimately, I think these next couple of weeks will probably just trade within these zones. So if you're looking for an entry, the best entry is probably going to be closer to 2,000, and your exit will be somewhere around 2,500. But again, Ethereum's chart is looking very, very clean. If we go actually look at it from a daily perspective, you can see we are just pretty much trapped in between these zones, and we are legit in the middle of our trading zone. So we don't really want to make any decisions as to whether buy or sell right now. We want to wait to see if it gets to our upside target or our downside target before we take any action. It's never good to trade in the middle of your zones, guys. So with Ethereum, you just got to be patient to see if it gives you another opportunity at 2,000, or if you see that it's starting to break above that 2,550 to go to more upside, then you can go ahead and jump in at 2,550. But just know that the short-term pit stop would be somewhere around 2,750 to 3,000. And so that is Ethereum's chart, guys. And so with that being said, we're gonna go ahead and close this out. All right, family. So I hope you guys enjoyed this week's Setup Sunday. As I mentioned, this week is a critical week. We have a lot of companies that are reporting this week. We have a lot of news that has the potential to move the market. So we've reviewed the levels that you need to pay attention to. So hopefully I've given you some guidance on how to navigate this upcoming week. Again, we will get back to our lessons of the week next week. However, just this week was just so critical as far as what we need to prepare ourselves for, and with this big, like I said in the beginning of the video, it could be a make or break week for the market. And so we just need to be prepared for it and understand what's to come and what are those key events. So guys, if you enjoyed this video, please give it a thumbs up. Go ahead and like it. Don't forget to subscribe to the channel and press that notification bell, so that way when I drop next week's episode, you are in the know. And with that being said, you guys know the phrase, stay blessed and peace out.
Run it up, run it up, run it up. We out for generational wealth. Who else but us? Run it up, run it up, run it up. This is first gen wealth building. Who else but us?